Welcome back to the Route Report, guys. This is where money meets news. I wanted to tune in a little bit earlier. We have Jerome Powell coming into the markets. He's going to be stepping on stage, talking about cutting rates 25 basis points. I want to share my screen right quick right here. We're taking a look at the chart of US NASDAQ 100. As you can see, the market is right now rallying up, as you can see right here. As soon as Jerome Powell gets on stage, I'm going to get this guy on the screen. Okay.
FOMC statement. What do they say? Lower the target range by 1/4 percentage point. That means they lowered it by a 1/4 percentage point, right?
Okay, so we're just
getting a 1/4 percentage point.
We're just getting word that they lowered the rates by a 1/4 percentage point, 25 basis points.
Okay. Now I don't know. All right, so there's the statement. Now I don't. Yes, they have lowered it by a 1/4 percentage point.
Okay, we got news. They lowered the rates.
That is what it was expected.
That's why you see this little bump here. That's why you see this little bump here on NASDAQ, on NASDAQ 100 tech companies. It was expected that if rates were cut, we were going to get NASDAQ to go up. Right now, we're having a little pullback on NAS. We're waiting for Jerome Powell to get in the screen. And let me go right here.
At 2:30 ET.
So we got Powell speaking at 2:30 ET.
So that was the expected. That was the expected amount of the cut.
Yeah.
25 basis points. That was the expected amount. We're waiting to see
both ways.
Hey, I actually was able to get it to you pretty quickly.
That was good.
So I'm glad we did that. We're waiting to hear. It's I want to change the clock because I want to change to
I also have a video about NVIDIA that's going to be released in about 40 minutes or so. I just gotta load it before I post it. NVIDIA, China basically cut off NVIDIA's AI chip, and we're expecting for the short term for NVIDIA to be extremely volatile.
Actually, I can make it Jerome Powell. Hang on. Let me just fix the clock here.
Okay.
There we go. We got our Jerome Powell
Markets
countdown
are
clock.
bumping up again here. You can see that right here. Markets are reacting positively right now to it. Stocks are bumping. NASDAQ. NASDAQ looking good. I'm in a trade long right here. I want this to go touch these highs right here, and I'll exit out of my trade right here. If NASDAQ pumps to these areas right here on the screen, then I will be exiting my position. Let me put my take profit right there. I'm trading off the phone because I'm doing all this on this screen right now. But this is a position that I'm waiting for it to reach. Almost there, though. Almost there. Woo! We pumping, baby. We pumping, baby. Okay. So, guys, I'm going to be sharing with you the screen on the FOMC report. And I'm going to read over it for right now. It says recent indicators suggest that growth of economic activity is moderate in the first half of the year. Job gains have slowed and the unemployment rate has edged up but remains low. Inflation has moved up and remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at a rate of 2% over a long run. Uncertainty about the economic outlook remains elevated. Okay. The committee is attentive to the risk on both sides. It's a dual mandate. All right. Dual mandate, and nudges downside risks to employment have risen. In support of its goals and in light of the shifts in the balance of risks, the committee decided to lower the target range to the Federal Reserve rates by 0.25% to 4.25%. In considering additional adjustments, the targets range for the federal funds rate, the committee has carefully assessed incoming data involving outlook and the balance of risks. The committee will continue reducing its holding of the Treasury securities. That's interesting. The committee is going to continue reducing its holding of securities and agency debt and agency mortgage-backed securities. Okay, that right there is wild. Right there. The committee will continue. I'm going to have to highlight. The committee will continue reducing its holding of Treasury securities and agency debt and agency mortgage-backed securities. If you remember MBS's mortgage-backed securities back in 2008, this is one of the catalysts that went and took our markets down. Okay, so they're going to reduce their positions on mortgage-backed security. And they continue saying, in assessing the appropriate stance of monetary policy, the committee will continue monitoring the implications of incoming inflation of economic outlook. The risk emerged that could impede the attainment of the committee's goals. The committee, and it just kind of goes on to saying, it tells you a little bit about who voted for it. And the market is retracing back from these areas here. So at this point, we are waiting for Powell to come on the screen for us, baby. And the market's doing a full retracement. Don't like that. Didn't hit the TP. So that's not the best job right there. Ooh, full retracement on the market. Full retracement on the market right there. Wow. Look at that. Look at that. Look at that. We're having a balancing act right now between bulls and bears, seeing who can take it to the next level. Yesterday, I told you guys that if the market didn't hold these areas here, we were going to tap these lows. We were going to tap these lows exactly around these levels. I'm talking about to the target. I had this level drawn out. I showed it on my last live, and exactly to those levels is where we went to. We tapped those levels and we poked back out. That's a good run, 140 points. If you caught that, it's 140 points on here.
Was Stephen Mirren, who was just appointed by President Trump, and he voted for a bigger rate cut. He is the only one that disagreed with quarter-point rate cut. Stephen Mirren, he just got appointed by Trump. He said he preferred to lower the target rate by 0.5 percentage point. So, of the 12 people who voted, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 11 voted for a quarter-point rate cut, and Stephen Mirren, the new Trump appointee, voted for a 0.5-point rate cut. There you go. So that's interesting. So that's the statement. We're going to hear a lot more from Jerome Powell in 21 minutes. But as you think about this, again, and I like how they explained it here, there are two big goals. One, to keep inflation down. Two, to keep employment up. Maximum employment,
pretty much this,
keep inflation at 2%.
This guy's getting it.
They're worried about both
right now as
because
far as
there's been some not so great employment numbers lately. but also inflation
I
is
did find
above their
interesting that
target
they
of
say that
2%.
they said that the
And we
committee was
have
going to
these a
continue
lot of
reducing
Trump
its holding of
tariffs,
treasury
which could
securities
increase
and
prices
mortgage-backed
more.
securities. I'm going to look into
So,
that
but
right
what
now
they've
so I
said
can
today
tell
is
you
we're
what that means
based
on a
on what's
plain
happening
language,
lately.
because
We're now a bit
you know
more
they talk a little
concerned
bit
about
in
the
verbiage.
employment side than the inflation side. So because of that, we are lowering our rate by a quarter percent.
Oh, full
Quarter
retracement
point
on the NASDAQ
by
100.
0.25%.
Look at this full retracement here. I'm still at a very good entry. I caught entry along the levels that I mentioned yesterday down here, so I got a good way. Didn't go up to exactly where I wanted, but I'm still protected. Just happened.
It helps some with employment, but also might hurt with the inflation.
Okay.
That's the benefit cost trade-off. Okay, so let me get you some reporting this. I want to take some comments on this. And in 19 and a half minutes, we're going to hear what we have not heard is what is their projection. I don't know that we've
Markets
gotten
is
their projection
sinking
yet.
right now.
But I believe we're going to get a bunch of projection
Wow.
commentary.
This is just ugly right here. This is ugly. Just ugly, ugly movement right here. It's like the market, this move right here, this was the market anticipated that Powell was cutting rates. This was the move right here. This was anticipation. The day before, a day to a day before Powell was cutting rates, it was a 96% chance that the rates were being cut. So traders knew that. With its chance like 96%, traders knew that the rates were being cut, and they just longed it. When it got to nearly these levels right here, the 2400 levels, traders began to sell off here, and it continued selling off, consolidated, and then decided to fall down and reached one of the major levels on the hourly levels, and then news popped up that they're cutting rates by 25 basis points. But I want to go back to this page here, guys, so I can tell you what this means, because the committee says they'll continue reducing its holdings. And to touch bases on that, when the Fed says that they're reducing its holding of treasuries, agency, and mortgage-backed security, it's doing something called quantitative tightening. It's the opposite of when they're buying assets. All right. The reason they're doing this right now, because I'm looking into it, and the market is just shitting itself. The reason they're doing this is because they want pools of liquidity out the system. All right. During quantitative easing, the Fed injects trillions of dollars into buying bonds. That makes borrowing cheaper. All right. They also want to push interest rates higher, but they need to tighten it right now because our job reports didn't come in that well. All right. We're still waiting for Jerome Powell to get in the news. Markets are just going down right now. Markets are just going down right now. Crazy, right? Absolutely wild. All right, we're going to tap into this right here.
The unemployment rate and inflation for each year from 2025 to 2028 and over the longer run. Fine. Appropriate monetary policy. All right. So there's all these charts. What I'm going to do is midpoint of. All right. I'm gonna post a link to these projections, but then I'm gonna read you the summary from Reuters of these projections. All right, so I'm sorry I didn't get this to you. I didn't realize this was posted. All right, I just posted that link to that projections document. But what the Reuters summary of the new projections is, what you can see is, where is it here? Oh, that's the old article. We want the new article right here. The Fed cut rates. Oops, the Fed cut rates. One moment, and I'll have this for you. I promise. There. The Fed cut rates by a quarter point. We knew that.
Look at the markets, guys. Wow. Wow. It's crazy because you never know how the market's gonna take this thing, man. The only thing you can do is try to protect yourself because this is absolutely bonkers right now. Look at this, bro. The market's like, market does not care about these rates right now. Wild. Wild, wild, wild.
Move to a more consistent pace of rate cuts was backed by Fed Governor Waller and Vice Chair of Supervision Michelle Bowman, Trump appointees who dissented over the policy decision in late July to hold rates steady. Okay, so Powell is speaking in less than 13 minutes. Less than 14 minutes. We're gonna bring you that live. Here, look, a little bit of a summary here. Wall Street ticks higher after the Fed indicates more cuts to interest rates are coming. The Fed cut its main interest rates for the first time this year, as was widely expected. Fed officials indicated more cuts are likely this year and next.
Very interesting right now.
I'm looking at, I got to say, I'm looking at stocks right now. And all right, so since the announcement, I'm looking at the S&P, the Dow Jones, and the NASDAQ. All of them rose on the announcement, but they've basically gone back, not that much, and they've basically gone back down since they rose, okay, to varying degrees. But
Right.
basically, it's like you see this spike and then it just goes down. But people are also waiting to see what Jerome Powell has to say in 12 minutes. We're going to have that live for you. 12.
Man, he's going to say the same thing the report says. And then he's going to say, Jerome Powell's going to say, hey, we lowered rates, man. I hope that you caught it. We gave you a both way strategy, and we're going to lower rates again in September. Sorry, in October, November. And guys, I will be dropping another video today. It's going to take about an hour to upload. I got to upload it in 4K quality. It's about China and NVIDIA. If you guys are just tuning in, it's about how China shut NVIDIA out from selling its Blackwell chips in China. So right now, the whole dilemma is that if China doesn't let NVIDIA sell chips, it is going to cost NVIDIA billions of dollars. If they have a partial agreements, NVIDIA can see a 7% upside. If they have a full ban, a full lift on the ban for chips, they're going to have about a 12% upside. All right, so the range from that is going to be from 0 all the way up to $23 billion. They're hoping that they get a partial ban, but if they don't, that's going to open up the doors for competitors in the local markets like Huawei and DataByte to take market share. In the long term, this is about market share. We're in a race of AI, and companies like NVIDIA, they're trying to capitalize on that market share. This is why NVIDIA is so big, because it has an extremely big market share. It has the United States of America, and then it has China, one of the largest market shares out there. So that video is going to be dropped in a little bit, in about an hour or so. For the time being, we are being patient, waiting for the news to have the man himself, Jerome Powell, get on. All right. So we're waiting for Jerome Powell to get on the news right now. We have the 25 basis points. We have the markets that absolutely went bananas, absolutely went crazy here on the market. But right now, we are just waiting for the news to hit me with Jerome Powell. I'm trying to see the man. I want to see the legend right now speak. He's out of office. May 2026, he's out of the office. So I want to see what he has to say.
The Fed is increasingly divided on the path forward. More policymakers signaled they have doubts about whether additional cuts are warranted at all this year. Oh. I wish I had a better sense of this document here. This is the projections document. Okay, so this is median projected appropriate policy path.
Hold on, I want to tune in.
I think somewhere on here you can find what the different voters.
I know one of my favorite YouTubers right now is on, man. He is breaking this shit down, and I got to see what he's doing right now. So much tabs I got open right now, guys. Where is the man? If he is not on, I'm going to be extremely surprised that he is not on. Okay. All right, I'm good. Okay, what the fuck just happened? Okay. Computer is lagging a bit. Oh my God, can we stop? Okay. Get this thing guy out of here. All right, so as far as right now, guys, we're just waiting on Jerome Powell to get into the committee so he could start speaking.
You know, this is where it's going to be interesting to me. I think that Powell is going to tell us about this potential normalization of the labor force participation rate. If he does, it's good because it means he's aware that it could change very, very quickly, and that would be bad for the Fed. So participation normalizing, we're going to.
If you guys don't know who this guy is name is Kevin. Feel free to subscribe to his channel at Kevin there.
Would be bad equals bad. Okay. Not only participation normalizing equals bad, but then we're also going to have the, you know what I really should do is Let me just throw this on the computer because I think my handwriting is just gonna kill everybody here. So I'll just slap this on the computer really quickly. And I think what he will say, like, he won't say, oh, it's, we're worried about layoffs taking off. He's not going to say that they're worried about the labor market taking off. Instead, it's much more likely that he's just going to say something like, if layoffs were to increase, we would be prepared to move faster.
Okay, that makes sense.
So that would be an assumption there. We'll see if he ends up saying something like that. Then I think I think they need to come across as really believing that the labor market isn't going to roll over. They have to sell us on that idea. Sell us that you're right, that your rate cuts are actually going to be supportive of the labor market. I don't know if markets will buy it, but that's what they're going to try to do. So he's going to have to sell us that these adjustments to rates should support labor. Okay? He'll say that. I don't know that it's going to be enough. So we're going to get the word, rates are normalizing. Rates normalizing to neutral.
And you know what's crazy? It's that if you're trading, you're seeing the charts right now. You would have been right and you would have been wrong. You would have had a long position because you thought the market was going to rally based on 25 basis points and it went up 100 points. If you caught any of that, extremely happy. If you would have held it, you would have gotten wiped out, lost a lot amount of money. So it's very interesting. I think it's so interesting that you can be right and wrong in a matter of 5 minutes, in a matter of 10 minutes, you could be right and wrong. And if you would have went in at the bottom here, you would have gone in long and you would have hit another 100 points because this drop here was parabolic, over 220 points for a drop. Now it came back up a lot. So the market right now, what we're going to expect to see here in the market is we're going to expect this to kind of go sideways until Jerome Powell begins to speak. He speaks in 3 minutes. So if you guys hold on tight, he speaks in 3 minutes. We're going to be watching the charts. We're going to be watching Jerome Powell's speech. We're going to be giving commentary about what's happening in the market. I am dropping a video. Make sure you like, comment, and subscribe. If you're a trader, comment and subscribe. What do you think the market's going to do tomorrow, man? Tomorrow, it's Thursday. We have red folders dropping on Thursday. If you don't know what red folders are dropping tomorrow, I have a video in my page. Matter of fact, I'm going to show you. I have a video. If you don't know what red folders are going to be dropping tomorrow, take a look at this right here. This is my page right here. This video I dropped 1 day ago about the Fed's cutting 25 basis points. This is the second day. It just hasn't totaled up the hours. But if you don't know the red folder reports that are coming out this week, go watch this video. I'll break down every single report. I'll break down what the market is going to do if the reports come out. If you don't understand it, if you're a beginning trader and you want a very simple language, I talk in a very simple, I talk like I'm talking to a golden retriever. I deliver the data the way the markets deliver the data, but then my breakdown happens to be one of the simplest breakdowns in the trading, in the news, and the political community. So go head to this channel, go look at that video, go get a breakdown of the reports that are coming in, especially if you have money in the markets and you don't know what's happening. Go take a look at that video right now, and you're going to like it. You're going to absolutely love it. So we are waiting for Jerome Powell again to come back and speak.
Be more cuts.
We got Kevin
more cuts.
Game right here. We're gonna play this game together. I'll play this game too.
I don't believe that he's gonna guide confidence on labor. He'll guide confidence on labor that basically, hey, what we're doing now is helping. I think he will say no recession, and the underlying is strong. I do think he's going to downplay Q3 GDP, and he'll average it to the year. Downplays Q3 GDP.
So we're looking almost like at a V recovery here, and at the NASDAQ came out. We're looking at like a V recovery here on the NASDAQ. 5-minute time. Okay. Daddy Powell's about to get on stage, baby.
Tariffs, one-time, overtime.
Boom.
Because of how they were implemented. Implemented overtime. All right. So let's get that banner out of the way. I think you all already know. Daddy's back is the coupon for the Meet Kevin membership. Remember, you get lifetime access to that membership. So like, our scenarios that we come up with when events like this come out, or the fundamental analysis that we're doing on stocks, or the top 10 stocks to buy over the next 10 years. Remember, you get those, as well as the top 10 stocks not to buy. Laptop, let's go, baby! Let's go, laptop!
Hey.
Andy's on time!
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June.
Market's not liking this.
In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant.
Bearish.
Yeah.
Wage growth has continued to moderate while still outpacing inflation.
Wow. My man. Kevin, bro. Wow. All right, guys. And I'm going to break all this down. I'm going to give an update, really simple, bar to bar, bullet point update on what he just said. All right. I'm going to show you how the market's reacting to this right now. As you can see, we popped up, fell back down, popped up. So we are just wicking back and forth. We're falling. The market's not liking what's being said right now. I think the market's being scared about recession risks. Yeah, he lowered rate, but he lowered rate because of jobs. I'll break this all down when he's done. Market is not liking this. Goddamn right. Cut. Cut. Market bouncing. Ooh. Lower lows, lower highs, yo. I ended up taking long here, this candle at this point right here. Aiming for somewhere around here. Daddy Powell breaking nuts today. Bringing home the bacon, Woodman, Woodman. Hold on again. If you're on TradingView, I got a chat here on TradingView that just exclusively for traders. Live trading, exclusively for traders. Money man. My dog. New video. I'm dropping a new video after this, after we get off of this live with Jerome Powell. China, Nvidia. Oh, market's about to take me out. Oh, I'm about to get out. I'm about to pop off my market looking like it wants to take me out. At this point, I'm going to protect myself. It wants my soul, man. It wants to take me out so bad. Oh shit. on. All right, guys, I am going to start breaking down what I think happened in the market. All right, so I'm gonna I'm gonna show you a PDF. Okay, let me zoom in so you can kind of start reading these things with me. Let me zoom out a bit. Can we get it out of the AI assistance thing? Okay, guys. All right, so I'm gonna start breaking down what happened. Basically, what just happened, why the Fed cut rates, the outlook. This is a nice little PDF. All right, so starting off with the headline, what just happened? The Federal Reserve just cut interest rates by 25 basis points. The first cut of 2025. The new target range is 4% to 4.25%. This marks a major pivot in Fed policy. They're officially moving from hold to easing. Okay? Going into why the Fed cut rates. Job growth is cooling. Okay? The Fed cut the rates because the job growth is cooling and unemployment is rising slightly, signaling a softer labor market. Inflation is falling, but it's still above the Fed's 2% goal. The Fed wants to balance inflation control with avoiding a recession. Jerome Powell thinks it's too late. The markets are thinking that it's too late. The Fed is looking to balance inflation controls by avoiding a recession. Okay? This cut is meant to ease financial pressure without letting inflation rebound. Okay, so that's why the Fed is cutting rates. So the outlook on this, what's coming next? All right, the Fed officials expect 2 more rate cuts in 2025. If data continues trending softer, markets are betting that those cuts come before the year end. Obviously, we're in September. We have 3 more months. So we're in the next 3 months, we're cutting rates two times. All right, so markets are betting that they're going to come before year's end. However, sticky inflation or strong jobs data could delay or reduce those cuts. We're going to go funneling up to our risk factors here. All right. So you can read along with me. Tariffs and global trade tensions, especially with China. I am dropping a video with China and NVIDIA, telling NVIDIA that they don't want to buy their chips no more and that prices could keep elevating. If core inflation spikes, the Fed may pause or even reverse cuts. If the labor market stays strong, the Fed might not cut as aggressively as expected. And then market volatility is likely if the Fed and investors disagree on timing. Looking at my view, my summary take on this is, I believe that the Fed will cut at least 1 more time this year, maybe twice. Rate cuts will support markets short term, but don't expect a full pivot on quantitative easing, okay? We're trying to keep up here, okay? We're trying to basically keep up here. We're in a data-driven environment. Every CPI, PPI, and jobs report matters right now. This is not a risk on green light yet. Stay tactical and stay selective. To close it out, some of the actionable takeaways you can have from watching the report is this. Watch for market rallies on rate cut optimism, but don't chase blindly. Stay alert for surprises, inflation reports, and because they will move the markets fast. Focus on sectors that benefit from lower rate cuts like tech, housing, consumer credits, okay? And stay tuned. The next Fed rate move will depend on data. I'm going to keep you updated on when the rate, as soon as I get the word on when the rate is, the Feds are going to cut next, okay? But the next meeting is in about 6 to 8 weeks. I'm going to give to you the next rate cut, all right? As far as right now, Jerome Powell is still speaking. Let's tune back in. Not only that, Kevin, the rich are spending, and it seems like consumers like you and I are spending more, but we're not. We're buying less stuff, but the things that we're buying are more expensive. So it looks like we're out here balling out, spending a lot, but we're not. We're buying less shit, but it costs more. Ooh, shit. Yeah, she has till May. She has till May of 2026. Super green. All right, so I'm going to wrap this up here. Just want to go over again some of the key points that I highlighted and shared with you guys. All right, guys, quick recap again about what it was being said. The Federal Reserve just cut interest rates 25 basis points, the first cut of 2025. The target range is 4%, 4.25%, and this marks a major pivot in Fed policy. All right, we also have the outlook. I think it's important to go over. The Fed officials expect 2 more rate cuts in 2025 if data continues trending softer. I think that's very important. However, sticky inflation or strong jobs data could delay or reduce cuts. Risk factors, we have tariffs and global trade tensions, especially with China. Video coming out with China and NVIDIA could keep prices elevated. We have core inflation that the Fed may pause or even reverse cuts. My view on here is that I believe that the Fed will cut rate at least one more time this year, twice, depending on data. Rates will support markets short term, but don't expect a full pivot to quantitative easing. We're in a data-driven environment. Every CPI, PPI, and jobs report matter. This is not a risk on green light yet. Stay tactical and selective. Something that we should be watching out for are rallies on rate cut optimism, but don't chase blindly. If you see the market, it has been whipping up and down, up and down. If you went long, you probably got. If you went long and didn't take profit, you probably stomped out. If you went short, you probably got stomped out. So you have to be cautious and don't change the market blindly, especially with news like this. Stay focused on sectors that benefit from lower rates. That's tech, housing, and consumer credit. And I will keep you guys updated on the Fed when the Fed is cutting rate next. It's expected between the next 6 to 8 weeks. But beyond that, guys, I appreciate you guys for tuning in. I want to give you guys a round of applause because it has been a long one. Record for me to be on this live here. So I appreciate you guys for tuning in. And as always, I'll see you in the next episode.